Welcome to Market Mind Solution. What if I told you one of the most compelling stock opportunities in 2026 is a company most investors have already written off as a boring legacy automaker? I'm talking about General Motors, ticker GM. And before you click away thinking this is just another old-school car company, hear me out. Because the GM of today is not the GM of 10 years ago. Let's start with what GM actually is now. Yes, they still build trucks, SUVs, and passenger vehicles under Chevrolet, GMC, Cadillac, and Buick. But the company has invested billions into electric vehicles, its proprietary Ultium battery architecture, autonomous driving platforms, and advanced software ecosystems. They're projecting nearly $7.5 billion in deferred software and services revenue next year alone. That's not a legacy automaker, that's a tech-enabled manufacturer in transition. Now here's where it gets really interesting, the numbers. GM is trading at a forward price-to-earnings ratio of just 6.52. That's more than 50% below both the broader market and its sector peers. In other words, the market is still treating GM like a slow-growth cyclical stock, even though its growth profile has fundamentally changed. How much has it changed? GM's forward earnings per share growth is 27.42%. That's over 3 times the sector median. And this isn't coming from just selling more cars. It's being driven by margin discipline, a strategic mix shift toward higher margin trucks and SUVs, cost efficiencies, and the benefits of aggressive share repurchases. Speaking of which, GM just announced a $6 billion share buyback program along with dividend increases. That signals serious confidence in their long-term cash flow generation. And the cash flow story is massive. GM generated over $26 billion in cash from operations. To put that in perspective, the sector median is just $325 million. GM doesn't need industry-leading sales growth to generate attractive returns. It's improving profitability and earnings acceleration do the heavy lifting. Now let's look at the growth trajectory. This is probably the most impressive part. Just 6 months ago, GM's growth Quant Factor Grade was a D. Today, it's an A-. That's a dramatic improvement, and it reflects strengthening forward revenue and earnings expectations across the board. In Q4, GM delivered about $45.3 billion in revenue and adjusted EBIT of roughly $2.8 billion for the quarter, with full-year adjusted EBIT hitting approximately $12.7 billion. Earnings per share beat analyst forecasts, showing that management's operational execution and cost controls are delivering real results. So we have a stock trading at a steep discount to its peers, with accelerating earnings growth, massive cash generation, disciplined capital allocation, and a structural transformation underway into EVs, software, and services. That's a pretty rare combination. But let's be honest about the risks too. GM is still a cyclical company. A slowdown in US consumer demand, rising unemployment, or tighter credit conditions could pressure vehicle sales, especially in those high-margin trucks and SUVs that drive profitability. Interest rate volatility could also impact auto financing affordability. And EV adoption rates could fluctuate depending on government incentives, battery costs, or competitive pricing from rivals both domestic and international. There's also broader market risk. If investors rotate away from cyclical or industrial names, GM's potential for multiple expansion could stall, even if the company keeps executing flawlessly. These are real risks and they deserve attention. But here's my take at a forward P of 6.52 with nearly 28% forward EPS growth. A lot of that risk is already priced in. The market is essentially saying GM's transformation doesn't matter. And I think that's wrong. This is a case where you're getting cyclical leverage paired with structural transformation, and you're paying a value price for it. If growth execution continues and market sentiment improves even slightly, there's meaningful upside from here. The bottom line? GM is no longer just a bet on the economy. It's a bet on a company that's actively reshaping itself for the electric, digital, and mobility-driven future. And doing it while generating enormous cash flow and returning billions to shareholders. That's your deep dive on General Motors. If this kind of analysis helps you make smarter investment decisions, make sure to subscribe. I'll see you in the next one. I'm Market Mind Solution. Follow for daily market updates.